minutes away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome to Hot Money right here on Bloomberg Quint Live. It's India's first digital live streaming business news service, a show which gets you a complete wrap of all the stocks buzzing in trade. I'm Vineeta Shah filling in for Tashan Mehta for today. Let's welcome our experts on the show, TS Harihar from HRBV Client Solutions and Vineeta Sharma from Narnolia Financial Advisors on the show. Both of you, thank you so much for joining in. TVS Motors numbers flashing on your screen. Before we get to what we're going to discuss on Hot Money, let me try and discuss a little bit of autos because that's what's really the focal point today. The May auto sales not down as much as the street was working with, and I think that's led to the stock doing well. Now juxtapose this with what Hero MotoCorp did in the monthly sales numbers, and they too showed some glimpses of strength. And remember the conversation with RC Bhargava today, wherein he mentioned that selectively pockets are doing well. He expects June to be a better month than April and May, and expects some demand revival from August. And liquidity is not the key concern why all of this has happened. Now put all of this into perspective, and there is little surprise that TVS Motors is doing what it is doing, up 4%. If you can just get the stock price of Hero MotoCorp up as well on the screen. I'm not saying it's doing a 4% move that TVS is doing, but Hero MotoCorp 5.5%. Maruti Suzuki was in the green. Remember when we started off the trading day today, after starting off marginally lower, it was in the green and still up about 1%. So autos seem to be doing really well for themselves. Just before we start, get to the show full tilt. Hari, let's start off with you. What did you make of the auto sales numbers? And selectively, there are some green shoots.
See, actually, if you look at the Maruti, which is probably the representative of the auto sector substantially, the SUV segment and the entry segment did very badly. It was only the compact car segment that has done well as far as Maruti is concerned. So I think normally, we look at revival in demand more from the entry level segment. That is where the revival really actually shows up. So that is not really showing a revival. I think Bajaj last 2-3 months, their numbers have been fairly okay, largely because they have about a 50% export exposure. So that is what has probably helped them. But I would probably believe that we need to wait another 2 or 3 months to see if there is any kind of a revival. Ideally, I think with the new government in place, with the government promising a lot of liquidity support, I would believe that this issue of auto should bottom out, because we have seen a 30% fall in sales. We also seen a 30% fall in the stock price of most of these auto companies. So I would believe that at least in this year, next 2-3 months, we should see a bottoming out. I wouldn't be betting on a great revival, but definitely I think a bottoming out should happen sooner rather than later.
What about the two-wheelers? They seem to be painting a slightly different story than the rest of the pack.
Yeah, surely, Neeraj, because if you look at the two-wheelers numbers, they are much better. And I think amongst the two-wheelers, we're liking Bajaj Auto because management clearly has a strategy. They want to have a larger share in the market. And right now, with the demand slowing down, definitely, any company which grabs the market share would be on a better rating. So I think on the two-wheeler space, we like Bajaj Auto, but on the four-wheelers or even on the farm machinery segments, we are not very positive, because if you look at the Escorts numbers, Mahindra also, I would say it's not very encouraging. So once we see some kind of revival or some kind of consumption boost from the government to the last level, I think then only we can see some kind of improvement there.
Not even CV.
Not really, because a lot of top line growth is already have been had in the past, and then some kind of so once we see the infrastructure revival getting in the country, only then can we have a fair bet on the CVs.
Okay, and by the way, speaking of tractor companies, that's the disclosure from Mahindra and Mahindra. The stake that was sold from an M&M Benefit Trust was sold to CDPQ. So now you have the name, and that should, maybe soothe some frayed nerves, if there were frayed nerves in the first place. The stock, though, just about 1% higher, nothing too dramatic. Okay, let's tell you what's lined up in terms of planned discussions on Hot Money. We discussed 2 sectoral plays and the best stocks in the diagnostic space and the retail space. NCC's been in news for Jagan Reddy's decision to cancel some contracts, how big will the impact on the stock be? And then whether Just Dial has run its course, the stock has run its course, at least for the time being. Let's try and talk about all of those. Firstly, the diagnostic space. And going through a bit of a lull patch if you look at what Thyrocare or some of the others have done. Dr. Lal Path Labs too, I mean 20% over the last 6 months is okay, but nothing too dramatic. And Thyrocare continues to trade near 52-week lows. Any thoughts here, Hari?
No, see, I think it's a big sector waiting to happen. It's probably something that is a little too young and too raw at this point of time. If you look at the overall diagnostic business in India, I think it's about 30 to 35,000 crores is the total size of the business. But roughly about 75 to 80% is as of now in the unorganized segment. It's not exactly the corporatized segment. And if you look at the corporatized segment, probably a handful of them like Dr. Lal Path Labs, Metropole, the Religare subsidiary, I think they all put together have about 40% of the market share. So it's a very, very concentrated market. Now, what is the stock we like? I think Dr. Lal Path Labs, to my view, has shown very good, I think, traction in terms of growth in sales, growth in profits. Latest numbers have been very good. And I think if we look at the big opportunity from two fronts, one, from the conversion of the unorganized into the organized. And if you also look at the big opportunity thrown up by what we call the universal healthcare scheme, I think they are going to require a lot of support from all these diagnostic centers. I think Dr. Lal Path Labs looks to be the best in terms of execution. So that is probably one stock we like. Valuations are a little expensive, but I think for a high growth sector, that is, I think, understandable. So this is one stock that we will be looking at in the diagnostic space.
What's the Narnolia Securities view?
So I would agree with what Harihar said, and even we are liking Lal Path Lab in that segment. There are, there are 2-3 reasons. One is that now they are expanding from Delhi NCR. Now they are expanding into Bihar or even Kolkata. That Kolkata is supposed to, get into break even in this particular year, and then even Varanasi. So they are expanding their reach, and secondly. Apart from expansion, the bouquet of services that Lal Path Lab has, it is a very, very extensive bouquet. Other than and there are a lot of other diagnostic players who are sending the samples to Lal Path Lab for getting their reviews. So I think the entire, the business that Lal Path Lab has, it certainly has a better advantage. There are a lot of competitions, there are small segments, and there are a lot of PE funding getting into small segments also. That remains a key concern for this kind of a business. But I think overall in a 10 to 12% growth, they have 700 crore as cash, which they are planning to go for some kind of acquisition. So I think 10 to 12% growth will definitely support the valuations here. And there is no debt in the books. I think one can have this company in their portfolio.
Okay, so both Vineeta and Hari sanguine about Dr. Lal Path Labs, not quite about Thyrocare, unfortunately. And there are, it's a small sector getting developed. Let's wait and watch what happens ahead. Okay, let's move on to the next space of conversation. And like we said, the first thing, of course, was what's happening to the diagnostic space. Let's talk about what retail and try and see what's the view out there that our experts have. That are now, there are a bunch of companies out there, some which people like, some which people are wary of, and some which are in a state of flux. And some which can play in an indirect fashion as well. So there's Spencer Retail, Reliance has a retail arm too, which is fairly large. So how do you play all of that? Vineeta, let's start off with you this time around. How do you play retail? What do you like here and why?
Retail as such, looking at the sector, it's a booming industry and we are very positive. As present, only 5 to 10% of India's sales are through organized sector. US or China, it is 20%. US is around 80%. So there is a huge scope for it to, though we don't have I would say, a lot of companies getting into it right now in the listed space, but definitely that also sector should, I think, grow with more companies. As regards any particular company, I think we are liking Trent Limited, and going by the the brand presence, they have redeveloped, I think, West Side, the kind of expansion that is going on in West Side. There are open 27 stores, more than 200 stores right now. Then on the value segment, they have Zudio, so which they are getting very aggressive into that. Some 28 stores were opened in some 28 days in Feb. February. So it's like they are getting very aggressive on that, and that touches the value segment of the customers. Then you have Zara, which is doing good, and Star Bazaar, which has been, which has been eater of the profits, is also supposed to get into profitable in the next financial year because of the change in the format sales. So they have gone from large format stores, they have gone into small format stores. So one, on the brand presence, the balance sheet, the consistency in the performance of top line, bottom line, etc., and also on the way the company is expanding. So these are the things that impresses me about Trent Limited. I would recommend one to buy.
Okay, so buy call from Vineeta is on Trent. Hari, what do you like?
We go back to good old DMart. That's a stock we have liked for a long time. Again, the general complaint is that valuations are a little steep. But if you look at the price, after reaching a peak of around 1800, stock has come down to about 13. So I think there is some amount of, I would say, valuation comfort that is back. Last, I think, 2 or 3 quarters, the growth has been a little disappointing. But I think that is more because we are already, doing it on a much higher base compared to what it was about a couple of years back. But I still think if you're looking at retail, then you typically look at what is the sales per store, what is the sales per employee, and on any of these metrics, if you look at it, Avenue probably is one stock that really scores over the rest. So I think purely in terms of past performance, in terms of the fact that they still have a lot of owned outlets across India, we like Avenue supermarkets at these prices.
None of the future group stocks or a Spencer Retail, which has just bought Godrej, that Nature's Basket as well feature. You don't like them?
Yeah, so I told you, as I told you, there are in the entire segment, all these companies are looking good. But then if you look at the Spencer acquisition right now, the kind of, I cannot see a lot of business synergies between the two, because they are very different kind of stores, a Spencer or a Nature's Basket. Plus, as regards Avenue Supermart, they are not very aggressive into becoming a pan-India player. So they are going slow on their sales or store expansion. So there are a few pockets as regards future. So there's been a lot of mergers, demergers, a lot of corporate actions going on, which ask me to stay away before things just get very clear on that. So I think keeping all these into mind, the safest bet I would say is Trent.
Okay, and maybe not, maybe a good strategy really to stay away, because a lot of these future group stocks are anyways very, very volatile, and Spencer Retail was just about getting into the black when they have done this acquisition as well, which I agree a lot of people say that they do not find the synergies, but it's a small acquisition, 300 crores. Let's wait and watch what happens there. What's not small is the quantum of orders that might go away from NCC's stable. They've mentioned that they haven't received any communication, but with the news flow on Friday, which led the stock lower, was that Jagan Reddy's government has decided to scrap some of the orders which have not commenced operations before 1st of April or 30th of April 2019. The stock took a big beating in Friday's session. In today's trade, about 1% higher. Hari, what does one do with NCC?
So, I spent about 10 years in that state, and I can tell you one thing, that there is nothing like a neutral business in Andhra Pradesh.
Okay.
All businesses are politically aligned. You're either aligned to X or aligned to Y. And typically what happens in that state is, if you're aligned to Y, the moment X comes to power, you have a problem, and it's the other way around. So I think what is now happening to NCC is something we were anticipating, because the group is known to be very close to the previous chief minister and the party that he represented. So I think the moment there is a change, this happens across the board. So there's nothing surprising. And obviously, I think next 4 or 5 years is going to be very tough for them. So because you'll typically find government orders going away, you'll find state orders getting cancelled. So this is very normal. Having said that, I think what is probably unfortunate for NCC is that it is happening at a time when South has shown good traction in cement prices. So I think that is probably one reason I would say it's unfortunate for NCC. But even otherwise, Neeraj, we have not been a great fan of NCC as a cement stock. So, we have always preferred something like a pan-India player like an Ultratech over something like NCC. So, I think whatever you said about, or at least whatever is now being expected that Jagan would do, I think it's definitely going to be negative for the stock.
Okay. Now, I would compare the kind of order flow and the execution that NCC has done in the last few years of its order book compared to the other infrastructure players, Vineeta. it does stand out tall. They've reduced debt. They've done all the right things. Can this overhang weigh in on the stock for the next 5 years?
You are very right, Neeraj. The way NCC has transformed its business is phenomenal. I mean, a person who has traversed through the stock market and remembers the 2012 era, they would remember NCC, and the kind of balance sheet and the profitable position right now of NCC is phenomenal. There's a great change. The debt equity used to be 2:1, now it is 1:2. So very good changes in NCC in the last 1 year. 53% top line growth, the bottom line expanded to 568 crores. They have done all the right things, but then this, which Andhra, which contributes around 30% of their order book, and what scares me is like, okay, the orders are cancelled for the future, but then what about the already executed orders, and how the working capital would get stuck up there would be really a concern, because already right now they have 3,000 crore of debtors and some 6,000 crore of current assets, loans and advances. So that and on a top line of 12,000 crore, that figure really looks a bit a little difficult to crack, as in how it will go forward, and also how the payments will be received going forward, plus whether the company will be getting additional order from that segment or not. So because an infrastructure company would depend on the order book, and if we are skeptical about what order books it will get in the future years, definitely you will need to have a caution over there.
Okay, now the NCC management, when they spoke to us, and you would hear management say this, but I'm just briefing on what he said. He said that after the cancellation of the orders, presuming that happens, their order book stands at 35,000 crores, out of which 10,000 crores is from the state of Andhra Pradesh and the remaining, or that geography. The remaining 25,000 odd crores is spread across the country, and therefore he, in his own wisdom, believed that there will not be a problem, and FY20 will certainly not be a problem. I think the thing that will go against NCC, Hari, would be that why is there a need to buy an infrastructure company which has these spots of bother, because there are others available which will also execute and which will not have these problems, right?
Absolutely. That's the whole point. That's the whole point.
So what name would you use? I mean, in the infra execution space, if not NCC, if somebody wants to put fresh money to work, which is a company that people can look at if you cover the sector?
See, as I said, if you're looking at a pure cement play, then for us, Ultratech continues to be the top.
If you're not looking at cement but looking at infrastructure,
if you're looking at infrastructure, I think something like Dilip Buildcon would be a much better bet. I think good growth, reasonable valuations, good cash flows, well-managed debt. So I would probably prefer something like Dilip Buildcon over NCC.
What about you, Vineeta?
So we are a fan of L&T. And I think L&T is one stock which one should actually aggregate, because the kind of the infra space as such, most of the infrastructure companies are expected to revive after the second half of this financial year. L&T is doing the right measures, offloading all the non-core businesses. They have a good amount of order book. So I think if we have L&T as a reasonable price, then why should we get into something? Because being a large cap, also in the right segment, and the kind of working capital getting reduced, etc., I think L&T is one share one should have.
Okay, so Dilip Buildcon from Hari's side, a Larsen & Toubro from Vineeta's side, a no to Nagarjuna Construction Company. The last stock on Hot Money today is Just Dial. Now, it's interesting because a lot of people question the business case in a scenario when large dominant global players are in the fray, but look at the returns. 3 months, 6 months, 9 months, 12 months, Just Dial has only delivered positive returns. So any point of time if you bought it, you made money. You can't say that for a lot of other stocks. Now, Vineeta, come in on this. Is this largely because such a high FI owned entity, selectively a high cash flow business, I would reckon, and therefore at lower valuations people might come in and buy? Is that the rationale? And if that's the rationale, has it run its course?
So, see, Just Dial is one company. If you want to write the future of India, it's something like a different kind of a story, not the traditional infra or a cement or something, But then the kind of growth the company has paid off in the last 2 years, they have changed. So some before that, some 3 years was a lackluster growth for Just Dial, and now they have expanded into not only the top cities, but they are going into tier 3, tier 2 cities, and that should add. They have a bouquet for the SMEs, so they are doing their stuff to get the top line back, and that is being shown in the latest profit and loss account of the company. The balance sheet is okay. There's working capital negative company. Definitely, one concern that stays is that because this sector itself is, this company itself is in a sector where a lot of disruption can happen. So, and that's the reason why the PE might fluctuate a lot. So right now, what looks at for 20 times FY20 PE can also become a little costly if the growth doesn't come from here on. So, and you're a 90 PE also. So that.
But then the growth numbers were looking a lot more promising, right?
Yeah, right now the growth numbers are quite promising. The management is also taking.
So I'm saying when it was 80-90 PE, it was much more promising than the current growth numbers, right?
Yeah, definitely. But then it has gone back into that era. So if you look at pre-14 or something, so it has gone back into that that kind of era.
Okay.
Obviously, Google, and if these people, the bigger giants, they come out with some kind of app which. The disruption is always possible in this segment, so that remains a concern. Also, if the FIA, so it is highly owned share, it's some 40% is being owned by other. So if anybody, large investor wants to get out, because most of them have been stuck up somewhere at different levels of Just Dial. So if once a run up comes and if they want to exit, so that can definitely hamper the share prices. All in all, I would say a yes for Just Dial.
A yes for Just Dial. Hari, do you agree?
I think the stock is showing good signs and good traction, but I'm a little worried about the price rally in the last, I think, 6 to 7 months. Because I don't, let's not forget that the stock was about 2,200 after listing. And I think from there it has corrected down to about 90% it corrected, and then it has picked up. So if you look at it in that perspective, it is not, I wouldn't read too much into the bonds. A couple of things, a lot of people probably don't know that this is a 25-year-old company. Actually, Just Dial actually started somewhere in the mid-90s. And, the very fact that a company in this kind of an industry has survived for 25 years, it does mean that the stock has got something going in its favor. So I think that is a good part. But, as Vineeta rightly said, Google is a very, very big risk. And, if Google can combine its power over maps, its locations, and, a retail database, I don't think Just Dial would really be able to match it. Probably Google does not find economic rationale in doing it in India at this point of time. But I think the day someone like a Google or an Amazon decides to do that, I would believe that they would have a real struggle going. So I don't see a very great, what I call moat in the business model as we look at it today. So, it's a model that is doing well today, but it's vulnerable to disruption at almost any point of time.
Okay, now just before we wrap up the show, a couple of things coming in from Vikram Kirloskar, president of CII, saying that they expect the government to undertake reforms on land, labor and capital, which should propel growth, because ideally growth in India should be northwards of 10%. GDP growth should be 10%. So this is the CII view that is coming in. Now, that notwithstanding, I think the equity markets and the charts will come up on your screen, intraday charts of the Sensex and the Nifty Bank. The Nifty Bank has inched up higher. It's propelled the index, the Sensex, to 0.8%. We're now trading at the highest point of the day, northwards of 12,000 for the Nifty as well. And it's a smart move in the session today. This is in stark, I repeat, stark contrast to what the world markets have done today. So quite remarkable what India is doing. And I would reckon that the large portion of what's happening right now is because of crude. Just as we wrap up hot money, just bring up the intraday of crude as well. And I think Brent and NYMEX have corrected about 5% in today's session to, maybe 1.5%, so 61.2, but 5% over the last couple of sessions, and trading very soft. So all of this should augur well for India. Well, I'll take a moment to thank both Vineeta and Hari for joining in today on this leg of hot money. Thanks so much. Stay tuned. Ask Me Q takes the action forward on the other side.